Securities and Exchange Board of India, SEBI for short. They're the ones who make sure the financial markets in India are running smoothly. Keep everything above board. Now maybe you're like, hold on, what's an IPO again? Net. Well, it's short for initial public offering. Basically, it's how a company goes from being privately owned to selling shares of itself on the stock market. It's a big step for any company especially for these small and medium-sized enterprises, the SMEs we're looking at today. And get this, SME IPOs in India have been just exploding, like almost double the value from last year. It's a lot of growth in a short time. But with growth like that, it's like a plant growing really fast. You got to make sure the roots are strong enough to handle it. That's where these new rules from SEBI are coming in. Basically, it's when a company's value just doesn't match up with its stock price, like going to the farmer's market and seeing a tiny apple priced the same as a giant watermelon. Something's not right there. Another thing they were worried about was leverage, meaning some companies were borrowing a ton of money to grow really fast, like building a house of cards. It looks impressive for a minute, but it's not going to last. And then, of course, there's transparency. Investors really need to see what's happening behind the scenes so they can make good decisions, right? It'd be like buying a car without being able to check under the hood. A little risky. So SEBI stepped in to fix these things up, to make sure the market's healthy and everyone's playing fair. That's what we're diving into today.
What's really interesting is that these changes in India, they're not just happening in a vacuum. We're seeing this trend all over the world. Regulators, especially in these up-and-coming markets, are trying to make their financial systems more stable, more transparent. It's not just about control, though. It's about building trust and making sure that markets can grow in a healthy way for the long term. It's like laying the foundation for a really strong building, one that can handle anything.
Okay, so let's get down to brass tacks. One of the biggest changes is this new rule about profitability. SMEs now have to show they've been making a profit for at least 2 years out of the past 3. Just to qualify for an IPO, no more going public based on potential alone.
Right, and that's a really big deal for anyone who's thinking about investing. It really lowers the risk because it means those companies have to prove themselves. They have to show they can run a real business before they come asking for your money.
Yeah, that makes a lot of sense. It's like making sure a chef can actually cook before you invest in their restaurant, right? You want to see they can make good food, not just hear them talk about it. Another big change is that companies can't. They can't use the money they get from an IPO to pay back loans from people on the inside. It's got to be used for the right stuff.
Exactly. It's all about making sure that money goes toward things that will help all the investors. Things like expanding the company, developing new products, making things run better. No more just shuffling money around or paying off favors.
So it's like you're paying for ingredients, and you want to make sure those ingredients are actually going into the meal, not just ending up in someone's pocket. Okay, so this next change, this one really got my attention. They're putting limits on what's called offer for sale, or OFS. It basically means that if you're already a shareholder in the company, you can't just sell all your stock at once during the IPO.
Right. This is really important for keeping things stable and preventing those huge sell-offs that can sometimes happen right after a company goes public. So you don't want everyone rushing for the exits at a concert all at once. It just creates chaos.
Yeah, because if everyone's trying to sell their shares at the same time, the price is going to tank, and that scares away other investors. It's a bad look. And there's another change that really pushes this idea of transparency. Now all the draft documents for an IPO, they're open for the public to comment on, so anyone who's thinking about investing can really see what's going on.
It's a big step toward making things fair for everyone, giving everyone a chance to understand what's happening and even give their opinion. It's like having a town hall meeting before making a big decision to make sure everyone gets heard.
Yeah, that's a great analogy. Okay, so we've covered a lot of ground here, but before we go any further, I want to mention one more important change. There's this new lock-in period for what they call promoters.
Oh, yeah. That means the people in charge of the company, they can't just sell all their shares and take off with the money. Right after the IPO, they're in it for the long haul, which is a really good sign for anyone thinking about investing. It shows they're committed.
It's like they're saying, hey, we believe in this company just as much as you do. It builds trust and shows they're serious about the future. So the big takeaway from all this is SEBI is really trying to make the SME IPO market in India more mature and more stable, right?
Absolutely.
Yeah.
And yeah, maybe these changes make it a little harder for some companies to go public, at least in the short term. But in the long run, it makes the whole system stronger, more reliable. It's all about setting things up for steady growth, not just a quick boom and bust.
And what's crazy is, remember that stat we mentioned earlier? Even with all these new rules coming in, the SME IPO market in India has raised almost twice as much this year compared to last year. That's huge.
It really is. And that kind of leads to a big question. Yeah, will these new rules, will they actually make it harder for companies to attract investors? Or will all this focus on transparency and stability actually make them more appealing in the long run? It's a question a lot of people are asking right now.
It really is. It's kind of like that classic debate. Do you go for the shiny new thing with all the potential? Or the one that's built to last, a reliable option? I mean, on the one hand, these regulations could definitely make it tougher for some companies to go public. They've got more hoops to jump through now, really got to prove themselves.
Right. But on the other hand,
Yeah.
that extra scrutiny could actually make Indian SME IPOs more appealing.
Yeah.
To a certain type of investor, the kind who's looking for stability and transparency. They might be willing to pay a bit more for a company that's gone through that tougher vetting process.
Yeah, that makes sense. It's like the difference between buying a used car from some guy on Craigslist versus getting a certified pre-owned car from a dealership. You might pay a little more for the certified one, but you've got that peace of mind. You know it's been checked out. And it comes with a warranty. And speaking of global trends, are there other examples out there of regulators stepping in to make things more stable?
Oh, absolutely. One that comes to mind is what happened in the European Union a few years ago, with their MiFID II regulations.
Yeah.
It stands for Markets in Financial Instruments Directive. Sounds complicated, but basically, it was all about making things more transparent and protecting investors.
So kind of like what SEBI's doing in India, but for the whole EU.
Exactly. And just like with these new rules in India, there were some people who were worried that MiFID II was going to be too complicated or too expensive for companies to deal with.
But did it work? Did it actually make things more stable?
Well, it's interesting. It took some time for everyone to adjust, of course. But a lot of experts now think that MiFID II, it actually made the European markets more efficient and more resilient in the long run.
So a little short-term pain for long-term gain.
Exactly. And I think we could see something similar happen in India by making things tougher for companies going public. SEBI is raising the bar, forcing them to operate at a higher standard.
Which in the end should benefit everyone, investors and the economy as a whole. It's like creating a cycle of transparency and accountability and sustainable growth.
Right. And here's another interesting thing. It's not just about regulations. We're seeing a change in how investors think, too. All over the world, more and more people are paying attention to things like environmental, social, and governance factors. We call it ESG for short.
Oh, yeah. ESG investing. That's a hot topic these days. It's about looking at a company's impact on the world, not just their profits.
Exactly. People are starting to realize that their investments, they can actually make a difference. They can help shape the world. And they're holding companies accountable for things like Itavoma, their environmental footprint, how they treat their employees, and how they govern themselves.
It's like voting with your dollars. You support the companies that share your values.
And that shift in mindset, it ties back into this whole idea of trust and transparency. When companies are open and honest about what they're doing, it gives investors confidence. And that creates a much more stable environment for growth.
Absolutely. And I think that's especially important in a place like India, where there's so much potential, so much room for growth and innovation. By creating these rules that encourage responsible business practices, SEBI is really helping to unlock that potential, paving the way for a brighter future.
Yeah, it's a really exciting time to be watching what's happening in India's financial markets. There's this energy, this sense of possibility. And while there will be challenges, of course, overall, I think things are moving in a really positive direction.
I couldn't agree more. Well, on that note, I think we'll wrap things up for today. A huge thank you to our expert for walking us through this whole world of SME IPOs in India.
It was my pleasure. Always enjoy our conversations.
And to everyone listening, thanks for joining us on this deep dive. Keep those questions coming, and we'll catch you next time for another fascinating exploration.